So welcome everybody to the Hospitality Network Group presentation on looking to buy real estate in 2022, navigating this crazy market. I can't think of a better place to be doing it than in Houston, which is certainly a very active market. We're going to get into some of those stats in a minute. A really amazing place to be selling and buying real estate. And so we feel like this particular program is going to be meaningful for folks all along the spectrum looking to invest in real estate. Those that are first-time home buyers, as well as investors, and those that are coming to Houston for work or a change in quality of life. So, and we couldn't have a better person leading the charge than Verlincia Williams from our team, who is the lead agent with the Hospitality Network Group at Keller Williams in the Houston Met office. So Verlincia.
Hi, everyone. I'm glad to be here to present this looking to buy a home in 2022, navigating in this market. So this presentation is for people who are planning for their future, looking to invest, first-time home buyers, and relocating for work. All right, we're going to go ahead and get started. So the Houston population now is 2,323,660. Houston is the fourth largest city in the United States. Only NYC has more Fortune 500 companies, which means that we're very busy, very populated. The median income is $88,092.
People are doing well in Houston.
Very well. All right. Houston is very diverse. It's a multicultural city, and due to the academic institutions, industry, and status as a port city, Houston residents speak more than 90 languages. That's amazing. So Houston also has one of the youngest population in the country. The overall culture. So GQ magazine deemed Houston as the new capital for Southern cool. Isn't that amazing?
That is great. And GQ is pretty cool, so they would know.
Thrillist ranked Houston among the 7 most impressive American cities for its diverse population, affordability, and strong economy. All right, let's get to some stats. All right, so the Houston market stats in the last 30 days. So in the last 30 days, there have been 4,330 active listings. The average—
Which sounds like a lot, but for a market of this size, it's really not that many.
That's just active. So not what's closed, not what's pending, not what's in the process of coming into the market, coming soon. So that's just active.
Right.
All right, the average listing price is $408,900. And the total days on the market for a listing is 69 days. So over the last 30 days, there have been 8,042 closed listings. So that number has doubled from active listings. So that kind of gives you an idea of what's going on around the city. The average closing price is $381,200. So with that being said, Houston is a very solid market to invest in. Houston has a track record of being one of the best long-term real estate investments in the United States. If I were you, I would invest here.
I agree. That's why we invested in setting up a team here.
Right. Since September 2011, the Houston home value has appreciated by nearly 92.1% according to Zillow Home Value Index, and it represents the entire housing stock in the community. So I am a Houston native, and I can definitely tell you that since moving into my home since last year, my value has appreciated more than I thought. So it's very up and coming, like it's a very good place to invest here.
That's wonderful.
Typical median home value in Houston is currently $231,326. In the previous year, the median home value was around $200,000. So what does that mean? Houston home values have gone up 16.5% in the last 12 months.
Amazing.
That is a lot. That is some very good news, especially if you're investing. That is music to your ears.
Absolutely.
So Houston is in the top 20% for nationally real estate appreciation. That's good news, just like that sign says.
Absolutely.
All right, there's a chart just to go over some of the things that I just stated. And then if you're interested, you can go to that website listed at the bottom. It'll be there for your viewing. We'll go to the next slide. So all indications are that the prices continue to rise in 2022 and the market remains competitive. However, housing stock continues to be tight with demand exceeding supply. So that means that there is a want, but the need is not, I mean, there's a need, but the want is not, there's not enough to accommodate for everyone's need. There we go. That's what I'm trying to say. So buyers are forced to compete, resulting in higher prices and quicker sales, meaning it remains a seller's market. All right. So last year, homes in Houston received 3 offers on average and sell in an average of 24 days, meaning that the offer closes in 24 days, average. The average sale price in Houston was $300K last month, up to 13.2 since last year. The average sale price per square foot in Houston is $151, and that's up 18.9% since last year. All right, we're going to talk about the money. Okay. All right, Miss Vikki is going to tell you guys about money.
Yes. So, you know, it's so exciting to be able to find the right house, to make an offer, to have your offer accepted, but you got to pay for that somehow, right? So, of course, most of us do that with financing. And so this next section is going to talk about just some current rates and to better explain the financing options that are available to people who are looking to buy, whether it's for a primary residence or an investment. So the current APR, and of course, this changes on a regular basis, but is a 30-year fix is currently at 3.28%. At this rate, a 30-year fixed mortgage would cost $437 per month in principal and interest. That does not include your property taxes, your fees, your insurance. So $437 per month per $100,000. The total interest paid over the life of the loan will be $57,268 per $100,000. So that's just to sort of lay down a baseline and give some perspective. What are the types of loans that people use to buy a primary residence? The two that are most popular are conventional loans and FHA loans, and we're going to dive into both of those a little more deeply here in a minute, but there are several kinds of loans that are available. So there's conventional, there's jumbo loans, which are for folks that are buying properties that are incredibly expensive. Government-backed loans include that FHA loan, VA for Veterans Administration loans, and then USDA for rural properties. There are fixed rate mortgages and there are adjustable rate mortgages. So those are the most common kinds of loans that we see people using to purchase primary residence. So let's talk a little bit more about conventional loans. And we're going to compare these to FHA, which again is the second most popular way that we see people buying property. So a conventional loan is not backed by the federal government. It is provided by a local or federal bank or credit union. It's less restrictive than the government loans. Government loans, you have lots of requirements to make sure that the property is structurally safe and that sort of thing. With a conventional loan, you could buy something, that might still need some work, but be able to fund it with that bank loan. 3% minimum down payment with a conventional loan. Typically, folks that are going to be able to get conventional loans are going to have credit scores in at least the high 600s, and they're going to need ample savings so that they can make a down payment and can pay for some of those closing costs, et cetera. Overall borrowing rates tend to be lower with conventional loans than with other types of mortgages, even if the interest rate is slightly higher. So there are going to be fewer additional fees that are going to be paid with a conventional loan in most cases over other types of loans. You can ask the lender to cancel the private mortgage insurance once the home or the property has reached 20% equity. And then sellers can contribute to the closing cost with a conventional loan. So those are some of the features and benefits and issues with conventional loans. There are two types of conventional loans: conforming and non-conforming loans, or what are also called in-house loans. Conforming loans conform to standards put in place by the Federal Housing Finance Agency. So remember, we said conventional loans are not federal loans, but conventional loans, if they're conforming, do follow certain guidelines put in place by the federal government. Standards include a range of factors such as credit and debt ratios. And then conforming loans also have limits. So the size of the loan in Houston is going to be the most significant conventional loan that you could get would be a $970,800 loan. That's the limit for this year. And every year they establish a new limit. In other areas, in most of the country, it's going to be $647,200. It's going to be the most that you can get in a conforming loan. So what does that mean if you want to go buy a $1.5 million property? What that means is you're going to have to get a non-conforming or an in-house loan. Again, what that means is that there are financial institutions that will provide that loan, but they do it with investors and other kinds of mechanisms. And so they do that through what they call jumbo loans. There are other instances where somebody might use a non-conforming loan. It might be that a property doesn't meet FHFA standards, or actually the opposite of jumbo loans for people that have subpar credit, but might have other assets that are beneficial. So maybe they have significant money in the bank, the credit score isn't so good. So the financial institution then is willing to do a non-conforming or in-house loan for those individuals. So now we're going to talk a little bit about those FHA loans. FHA loans are insured by the Federal Housing Administration. They require a 3.5% minimum down payment. So remember, with conventional loans, we said 3% is the minimum down payment, but your credit score can be lower with an FHA loan. That is why they are so attractive. So with conventional loans, somebody's going to need to be in the mid to high 600s to qualify. FHA loans, often you can get with a 580 credit score. That is going to depend on the financial institution, because financial institutions do, establish their own criteria in that regard. If your score is a 500 to a 579, you may still qualify for an FHA loan, but you may need to put more down. So it may require a 10% down payment. And then, as we indicated, that lenders can require a higher minimum if they so desire. So again, just to kind of wrap that up, conventional loans typically require a credit score of at least 620 or higher. With either credit score to get a mortgage will come down to the lender. So that's what we just said. The lender is going to determine whether the credit score is going to meet their criteria. And then with both conventional and FHA loans, you'll be offered a better interest rate if you do have a higher credit score. So your credit score absolutely is a factor. And sometimes we work with lenders and individuals who are looking to purchase but haven't gotten themselves pre-approved, although of course we always hope that's the case. But we can help them by connecting them with lenders who can help them to get that credit score up if needed. Of course, sometimes people are looking to finance not for a primary home, but for a second home or an investment property. Incredibly popular right now as more and more people are investing in, again, we are from Tuscaloosa, some of the agents in our group. And so, we have a lot of parents and alumni who want to buy second homes because either they want to come and visit their students or they want to come back and attend football games. But the other thing is, sometimes they want to buy them as investment properties that they can then offer as long or short-term rentals. So what's different about getting financing for those kinds of properties? You can use a conventional loan, but usually it's going to require a higher down payment. And then the other thing that lenders look at to identify whether or not you can use that conventional loan to buy a second home is typically it has to be 50 miles or more from the primary residence to qualify. People also do what's called a cash out refi of their primary residence. So again, to reference what Verlincia spoke about earlier, where people's equity is going up so incredibly fast year after year, what some people are doing who are savvy is they are taking their home, they're refinancing it, they're taking all that equity out of their primary residence and using it to invest in either a second home or an investment property. There are hard money loans, which are short-term financing. Those are typically going to be at a higher rate. They're not offered by banks. They're offered by financing organizations, entities, and there's usually a shorter time frame to pay money back. So often you'll hear of people saying they're going to buy a property with hard money if they're looking to flip the property and that kind of activity. But sometimes people use it to buy a second home or an investment property. And then if you're going to buy multiple investment properties, if you want to get into the Airbnb business, as some of our clients do, sometimes they will go and secure a commercial loan to do that kind of activity. So now I'm going to turn it back over to Verlincia, who's going to talk about some of the home buyer programs that are available.
All right, thank you, Vikki.
Of course.
So there are some home buyer programs available here. There are federal programs, and those are programs for like teachers, officers, and firefighters, and that's called the Good Neighbor Next Door. That's available. They also have the home ownership for public housing residents. And then there's also the Indian Home Loan Guarantee Program. Those are federal programs that are available. There is also state programs that are available for the state of Texas, and that is the Texas Department of Housing and Community Affairs. And they have home buyer programs, including down payment and closing cost assistance. There's also the Habitat for Humanity, which is they, through volunteer labor, build and rehabilitate homes for families in need. Another state assistance program is the U.S. Department of Agriculture Rural Housing, home buyer programs in rural communities. There's the Veterans Land Board Housing Assistance Program. This helps eligible Texas veterans purchase a home. Then there's the Texas State Affordable Housing Corporation. This is a home buyer program that helps with down payment assistance and mortgage assistance.
That's great.
Mm-hmm. Then there are also some city home buyer programs, and that would be the City of Houston. So the Home Buyer Assistance Program is just very basic naming, but it's the Home Buyer Assistance Program. And then they have the Harvey Home Buyer Assistance Program. All right, let's get into these steps of buying a home, the process of buying a home. So the first thing you want to do is find a mortgage loan company so you can get that pre-approval. That's the second step, get your pre-approval. So once you have that pre-approval in your hand and you're ready, you can find a realtor, which I hope is me.
Absolutely.
If you're in Houston, if you're in Alabama, Miss Vikki, or the rest, anyone else on our hospitality network team. And then once you acquire us, you will find we'll help you find the perfect home. From there, we'll make an offer and hopefully, fingers crossed, they accept it. Once it's under contract, which means that the seller accepted your offer, you'll get inspections and schedule any important inspections. I'm sorry. And then usually the buyer pays for these items. So there's a home inspection, there's termite inspections, there are different types of inspections that you can purchase during this time. The next step is to obtain an appraisal. This is required by the mortgage company, but the buyer has to pay for this. But this is a requirement if you're going through a mortgage loan company. The next step is to obtain a survey if one is not already available. And then the next thing, you'll shop for a homeowner's insurance. And then we'll do a final walkthrough. And then after that, we're at closing. That's the day you've been waiting for once you put in that offer. Exciting.
Absolutely.
All right, so some tips to buy in a seller's market. Some tips we want to offer you guys. If you feel like you can't find the perfect home or the perfect home just keeps getting snatched away from you, here's some things to look into to help you find that perfect home that maybe it's a little quirky, but you can fix it and make it your own. And when you're done, it's going to be the perfect home. So we say that you can find a property that's been on the market for a while because it is that quirky home, but maybe it just has that closet or something that's in the wrong space, but maybe you can make that into something else and make it your own. Another thing you can do is find property in an up and coming area, and that's how you build that equity. So if it's up and coming, there's other stuff that's going to be built around, and then your equity is going to increase. So that's something to look out for, especially if you're looking to invest. Then we also ask that you find a property that needs work, just like that closet that may just be in that wrong spot, but just a little paint or something can make that closet into something way more than what you thought what it looked like when you bought it.
Well, we also find that a lot of people just can't see past something as simple as paint, right? So if one room's a bright lavender and the other one's orange, and then the third room's a strong baby blue, people say, I don't want this. I don't want to deal with this. And if they saw that very same house and the walls were all painted white or a soft gray, they'd snatch it up. So, often those are the houses that we find that, can help somebody when they've lost out on the third, fourth, fifth house in a bidding war. So
just some key things to look out for. All right, so we have some market predictions for this year. Okay, we expect home sales to increase another 6.6 and home prices to rise another 2.9 on the top of the 2021 highs. Mortgage rates will gradually increase, making affordability a top consideration for home buyers, especially millennials who are at prime first-time home buyer age. Demand from these young households will keep the market competitive and fast-paced. So look out for these millennials. They're on the go and they're ready to buy. All right, so if you guys have any questions, feel free to reach out to me. I'm Verlincia Williams. There's my contact information. Reach out to Miss Vikki. She's the team lead of the Hospitality Network Group. We're here in Houston and we're also in Alabama. You can also contact her if you have any information. Our website is there. You feel free to go and look on our website to see some upcoming events that we may be having. If you have any questions, feel free to let us know.
Yeah.
Okay.
Thank you. No, I think that's it. I was going to see if there was anything in the chat we needed to be aware of. Okay. How are you feeling? Change remains strong. Okay. Yes, I mean, again, I think that all predictions are that the market's going to stay strong. It's been interesting. I've been in real estate now for 5 years, and I feel like every year since I started, they would say, well, we're in a strong market, but next year we're expecting a downturn, and that just simply hasn't happened. I know that that doesn't mean it's going to go on forever, but there have been so many, especially within that time frame, so many unexpected things that have happened in the market that have allowed the housing market to stay strong in spite of, like the pandemic. I think many people thought that was going to be a problem, and the opposite was the case, because people realized as they were staying home, they wanted something different in their house, or they wanted to be in a different place. So
they noticed those things that wasn't really noticeable.
That's
because
right.
they had the time to actually look and see it.
That's
So,
right. That's right.
Yeah.
So, yeah, so I think that, and again, the interest rates, while they are inching up, are still pretty historically low. I certainly don't remember these days, but I knew the people that were my parents' age, talk about buying houses that were, when the interest rates were 17, 18, 19%.
Oh, wow.
I know, can you imagine?
Oh, my goodness.
I know, we wouldn't know what to do with that. So, yeah, but so yeah, we anticipate the market being strong.
Yeah. We look forward to helping you guys buy your next property, your next investment.
Yes.
We're happy to help.
Yes. Please let Verlincia know if you need anything. Thank you.
Thank you.